time has come for policy to adjust.
Federal Reserve Chair Jerome Powell explicitly endorsed cutting interest rates on Friday in his highly anticipated speech in Jackson Hole, Wyoming.
The upside risks to inflation have diminished, and the downside risks to employment have increased.
Addressing central bankers at an annual symposium, Powell expressed confidence that inflation was within reach of the Fed's 2% target and said policymakers want to avoid further cracks in the job market.
This is about as much of a declaration of victory as you're going to get from Jerome Powell.
Reuters reporter Howard Schneider was there.
The bottom line here is that the first cut's coming in September. There is little doubt about that now. He all but promised it will be coming. Quarter point, half cut. He didn't talk about much, how the policy path will unfold from here. People said, look, he won't say mission accomplished. He didn't. But he came very, very close, saying that he has confidence inflation will return to targets.
The Fed raised rates to a 2-decade high when inflation soared during the pandemic. It hasn't moved them in more than a year, even as inflation fell and the economy kept growing. Officials are now hoping for a soft landing in which a recession is avoided.
We do not seek or welcome further cooling in labor market conditions.
Powell also talked about protecting the labor market as the Fed cuts rates, though he also said the recent uptick in unemployment was due to rising labor supply and a slowdown in hiring, not layoffs.
For right now, at least, he sees this very much about protecting an unemployment rate that's 4.3%. That's a little bit higher than when he took office in 2018, and it's probably higher than he wants to see. He surely doesn't want it to go any higher from here.
After Powell's remarks, markets priced in slightly higher odds of a half-point rate cut in September, while most investors still see a quarter-point cut as more likely. All three of Wall Street's main indexes rallied in Friday trading.